Welcome back. Well, investors are getting accustomed to looking at the graph of the S&P TSX Composite and seeing it in record high territory. Let's speak to somebody who studies the index and the Canadian market very closely, Bloomberg Intelligence strategist Gillian Wolff. She joins me in studio right now. Thanks for coming in. Great to have you here in person.
Thank you, Paul.
We usually speak to you via the cameras. Okay, so the S&P TSX Composite at record highs, but in your most recent work, you say earnings and revenue forecasts for TSX Composite companies have actually come down since April.
They have come down pretty significantly. We've really seen earnings forecasts around the globe start to come down. But what's quite interesting and what might actually shock investors is that the U.S. earnings outlook for the S&P 500 has actually come down at a much more rapid pace than the Canadian outlook for 2025. And now analysts from a bottom-up perspective are actually forecasting that growth for earnings within the TSX is likely to be faster than the S&P 500, at least for this year.
Okay, does that explain the dramatic outperformance we see in this index versus the S&P 500?
It definitely helps support it. I think there's a few driving factors for the Canadian index right now. One is that it's still relatively cheap compared to its own history. The U.S. is near its 2021 all-time highs on a forward PE basis. Part of the trade we're seeing globally take place right now is a shift towards lower beta markets. So whenever there's high geopolitical tensions or uncertainty, investors tend to pile into lower beta markets like Canada. That's why we might be seeing Canada start to outperform the U.S., and it's something that we wouldn't be surprised if we kept seeing that going forward this year.
Give us your scorecard on first quarter earnings here in Canada among TSX Composite companies.
So first quarter earnings did miss in aggregate, actually. They came in around 12.8% growth. Analysts had originally forecasted about 14%. But overall, it didn't really hurt the outlook going forward as much. What's really been hurting the outlook going forward is what might happen with these tariffs and how quickly they get resolved. One thing we're keeping a close eye on right now, though, is what's happening in Iran and what's happening with oil prices, because what really drives the Canadian outlook more than anything else is WTI. And that we're likely to see a boost to the Canadian earnings outlook, much more so than the U.S. earnings outlook, were oil to get that boost.
Energy is perceived as, the energy shares are perceived by many investors as being a disappointment through the first half, and certainly the price of crude oil.
Yes.
There's debate about that. Many experts say that the companies are making plenty of money at the current level of crude oil. But how strong was the contribution to TSX earnings from the energy companies in the first half of so far in the first half of this year, and what might we expect in the second half?
So in the second half, we are expected to see a return to growth at least by the fourth quarter. Next quarter, 2Q earnings are expected to be very negative on a year-over-year basis in both Canada and the U.S., but actually more so in the U.S. Overall, for 2025, the outlook is still far worse for U.S. earnings in the energy space than it is for the Canadian earnings in that space, because the Canadian companies are so much more exposed to producers. The U.S. has a mix of refiners right now, and there's also a shift in how these refiners are going to have to compensate for the Canadian oil tariffs. They do have to keep buying Canadian oil. They're outfitted to process that heavier crude. They can't just shift to drilling more, even though Donald Trump would like that very much, and processing more light oil. They have to keep paying these tariffs, and that's really starting to hit their margins more. We're
going to speak to one of your colleagues on the Canadian banks. So what's your take on the earnings performance and outlook for the Canadian banks so far?
The Canadian banks really for 2Q are still expected to post in aggregate some year-over-year growth. They are poised for a deep contraction in the U.S. The biggest concern for the Canadian banks right now really just is still the strength of the consumer overall. We've seen consumer confidence drop very low in both the U.S. and Canada, but we haven't really seen more of this hard data start to turn over. Retail spending is still strong. We've seen defaults pick up a little bit, but they're still below where they were prior to the COVID pandemic. So we haven't really seen this turnover, even though loan loss provisions have picked up quite a bit.
One thing you track is the sentiment being expressed by executives on conference calls here in Canada.
Yes.
What were the first quarter calls like in tone?
The first quarter calls in Canada, it was similar to the tone in the U.S. We definitely saw a significant quarter-over-quarter drop, but we're really seeing managers try to hedge their bets with tariffs right now in both the U.S. and Canada. We saw this when the first Trump tariffs took place in 2018. We saw actually a decent amount of positive sentiment when speaking about the tariffs, because CEOs were so focused on how they were going to mitigate the impact. What we're looking to see going forward is that sentiment's likely going to drop once the impact actually hits. So some of the CEO optimism we maybe saw on first quarter calls, we're likely to see that degrade in the coming quarters.